Americans looking for inflation relief may have to wait a bit longer. According to the latest read on consumer prices, inflation picked up in August to the fastest pace in 7 months. With the labor market flashing warning signs and jobless claims spiking to a 4-year high, could the latest inflation data complicate the Federal Reserve's next interest rate decision set for next week? So these are the kinds of issues you got to debate. We talk about open debate, inflation and the economy, top of that list. Marcus, we got some inflation data today. What do you think?
I think the CPI data came in about expected. There was one thing that I thought was very interesting, and that was the used car number of 6% up. And everybody's saying that that's a bad thing. I'll tell everybody at this table and everybody watching, used car values going up is a good thing. That means what you own today is worth more tomorrow. If your houses go up, that means it's worth more tomorrow. So we got to really start to peel apart the data to understand what is really going up. I didn't see a lot about furniture. I didn't see a lot about apparel. Okay. There's some transitory movement there. For me, it's time to do it. It's time to have a more radical shift in the rates. The job numbers are just not good. And it's not about AI efficiency. I keep hearing this nonsense. Oh, it's AI efficiency. No, people went home. I unfortunately sent people home. Okay. I know it. I know other companies have as well.
Interesting, Terry.
Let me pop in on, you just mentioned where prices are rising, where they're going down. Housing continues to rise, but we are really seeing certain former go-go markets get dinged here. So you're seeing Austin, you're seeing Miami, you're seeing Tampa. There are cities all over the country where prices have actually started coming down. I think this housing inflation is going to stall out at some point, and that will ultimately be, shown in the inflation numbers. But we've got a little ways to go yet.
You know, you read how the market responded to these numbers this morning, Dagan, looking at bonds, looking at stocks. It seems like investors are settled on the idea that the inflation's probably not going to spike. And the bigger concern here is a deteriorating jobs picture. What do you think?
The Federal Reserve is going to fight unemployment and focus very clearly on the slowing job market. And 3% is the new 2% in terms of inflation that they've settled with. They're going to move away and not continue to fight inflation and try to bring it down even more. But there are two tricky things in that. Inflation's not down to the target. If inflation reverses itself, because it is a psychological phenomenon, but asset prices are still, look at what the stock market's doing. Stocks, housing is still wildly overvalued compared to what people earn in this country. Crypto, you name it, it is bubblicious galore. And so what happens? They cut rates, the bubbles keep inflating, and then you get a ginormo bubble that explodes, just like in the 2008 crisis, and you have this massive cleanup that has to happen after that.
Are you suggesting that we don't cut rates? That's kind of what I just
think
heard.
that they will absolutely cut rates.
Because the 10-year...
It is, given the environment and asset prices, that is a big old risk.
Yeah, let's look at the 10-year. The 10-year dipped below 4 this morning.
Right, that's a bubble.
Right at 4 right now.
I would say there's maybe a bubble in even long-term bond prices, given the state of our federal fisc.
Mike, I associate the word bull with you more than bubble, and I'm guessing you're going to be in that camp here. What do you think?
Yeah, look, so what I find most interesting about this morning's number is that if you look at the CME Fed Watch tool, okay, by January, we're up to 4 rate cuts on a 50-50 basis. Right, and so I think if Jerome Powell was doing his job right, the front end would be 100 basis points lower right now, right? I think we're 200 basis points restrictive, if not 175. It's the most restrictive we've been in this entire inflationary cycle. So I think we're going to get 25, 25, 25, at least 3 rate cuts here, maybe a 4th, and then by this point next year, probably 7, 6, maybe 8. From where we are, and that's how we need to look at everything. And yes, there are problems underneath with the labor market. And I think, the tariffs, whether we like it or not, it creates uncertainty, which makes it harder for markets like people to cost things out. And while we're still navigating through that, it's going to be a problem. I do think we'll see some recovery next year, especially with the EPA and the deregulation you get there, the big, beautiful bill, the immediate depreciation that you're going to see in there. And then another thing you got to look at is look at how good the PPI number was yesterday and how that's a leading indicator. So I do not see inflation as a problem. And as to asset prices, look at Oracle. Right? The stock looks expensive until they tell you their earnings are going to grow a gazillion %, right? Because of this AI thing that's going on in the background. And when you remove these AI names, and if you're looking at their forward PEs, what's going to happen in reality is probably anywhere from 15 to 50% higher for most of these Mag 7 names than what's priced in the market right now. And when you look at it kind of at the bull case of the earnings, these multiples go from the mid-20s down to the high teens. And given where rates are going and what the economy is likely to do over the next couple of years, I do not see an asset bubble.
Well, growing at a gazillion % is one of those terms you might associate with bubble thinking.
Unless
gazillion's one of those big numbers. I don't even know how many zeros there are.
But unless you're at a turning point in history. And I'd say at this moment right now, a lot of these AI names are wildly undervalued, like a NVIDIA. Right? And you can't go anywhere without these GPUs. You look at Marvell, right? Trading at 15, 16 times forward earnings, and their revenue is going to go from $9 billion to $23, $24 billion in 3 years. We've never seen growth like this.
But Oracle isn't driven just by AI. It's the deferred revenue contracts, along with the storage, along with their other products. A lot of those things, right?
Yes, but it's the cloud services growth, and the cloud is being driven by the demand for large language models, and then after the LLMs is going to come the AI agents and the applications, and the inputs to the LLM is data. So data's growing at a hockey stick rate, right? And then the AI agents and the applications are going to use exponentially more compute, more NVIDIA GPUs, more cloud services than the LLMs.
But Mike, you're laying out the mega bull case for AI.
I think I'm laying out the base case.
No, it's not the base case, not even from people who work at AI companies. They see a over-investment in AI right now that needs to come back down to earth.
Now, let me just cut in on this because I love this conversation, and the great news is 2 blocks from now, we're really going to dig into it. So whatever great
Oracle
thoughts you had, go for it. Just hang on a second. Jerry, you're looking at Klarna. What's going on?
I'm looking at Klarna, and you know what? 40% of Americans are looking at Klarna and all of the other BNPL players. Yep, buy now, pay later. Americans are relying on services like Klarna for just about everything, even groceries. And Klarna is cashing in. The stock went public Wednesday and rose 15% at its debut. Klarna opened at $52 a share after the company priced its shares at $40. Who is excited about this? I think, talk about your bubble. Like Americans binging on this kind of debt to go to McDonald's. Am I being judgy by saying that's not a great idea?
No.
Dagan.
Well, I'll tell you what. Like the last conversation, let me kick all this bubble talk just a little bit down the road, because in this show we have to take a
kick it
commercial
hard.
break. Yeah. We'll see. Is it a Charlie Brown kick or something else? Coming up. For years, taxpayers have been spending billions on university research. Now the White House says it's time they get a piece of the profits. We'll explain when we return.